Now, allow me to introduce our speaker for today, Yi Xuan. He has a background in economics from the University of Malaya, and currently he is the general manager of Algopedia Sendirian Berhad, which is a proprietary trading firm in Malaysia specializing in algorithmic trading. He brings over 5 years of experience in content creation on personal finance and investment through his personal blog, nomanila.com. In addition, Yishan has been featured on various media platforms, including C Plus FM, BFM, Chaiting, and others. So, without further ado, I am delighted to hand over the presentation to Yishan. Yishan, over to you.
Thank you so much for having me. Can you hear me?
Yes, your slide is up. Can hear you clearly.
All right, thank you so much. Good evening, everyone. So the topic of our sharing session today is seasonality secrets, a dive into Malaysia futures and spread trading. Now, before we start, allow me to quickly go through some basic disclaimer. So this presentation is provided for general information only. It is not intended as an investment advice, offer, or solicitation for the purchase or sales of any securities, stocks, futures, or investment products. So stocks, securities, and futures imply risk and to be undertaken only if you understand the risk. Please seek your own tax, legal, and financial advice before investing in stocks and futures. All information in this presentation is subject to change without notice. Now, good evening, everyone. So what are we going to talk about today? So there are actually a few things that I want to share with everyone today. Number one is I want to share with everyone how seasonal trend works and among our daily life and and most importantly in the futures market. And secondly, I also want to share with everyone some foundation to spread trading, which is, in my opinion, one of the most effective trading approach when it comes to the futures market. Next, I also want to share with everyone how to use seasonal trading strategy when it comes to spread for Malaysia futures products. Moving on, while seasonal trading is a great approach to trading, it has its downside and risk. So in this particular section, I'll also share with everyone what are some of the risks or things that you need to consider before using seasonal trading approach in your strategy. And finally, I want to share with everyone through my personal experience and learning some of the things that a trader could consider while developing an effective spread trading strategy. Now, without further ado, let's get started. Allow me to start by sharing with everyone what is seasonal trend or what is seasonality. Now, seasonality essentially is a repetitive and relatively predictable pattern in the market and in our daily. Now, it is very seasonal pattern can be seen in our daily life, and some of them include US temperature. So in the US, there are 4 seasons from January to December. So as an example, highlighted in blue on the chart on your right, January to February are generally colder because it's a winter season in the US. Okay, and from June to August, why is it hotter than usual? It's because it's summer season in the US. Now, moving towards the year end in December is also cooler than usual because it's the beginning of winter. Now, March and May, on the other hand, are the season after winter, the spring. So generally, you start to see where temperature started to pick up. And the month of September to November is generally, you start to see a lower temperature, which is because autumn is the season of autumn in the US. Now, closer to home, in Malaysia, we have our very own unique monsoon season that's different from the US. Okay, so in the month of November to March, in Malaysia, we have the Northeast monsoon, or in Malay, we call it Monsoon Timur Laut, right? Where there tend to be heavier rainfall in states like Johor, Sabah, Sarawak, and Pahang. Okay, and in the month of May to September, we have this thing called the Southwest monsoon, or in BM, we call it Monsoon Barat Daya, which is generally a drier period for the whole country, okay, with the exception of the southeastern coastal belt of Sabah. So if you look at the chart on your right over here, it shows you the how much is the rainfall in Malaysia for the past decade. Okay, and you can see the highlighted red area is from November, December, January, February, March, which is equivalent to the monsoon Timur Laut that we all experience. So as you can see, these few months are generally more rainy, which shows us the seasonal tendency for Malaysia's climate. Now, I would like to also take a step back by tying back our topic today to Bursa Malaysia futures products or futures instrument listed in Malaysia. Do you know that in Malaysia there are a lot of futures product that you can trade? It's actually a very vibrant market that a lot of traders could find opportunity from. So number one is most certainly one of the most traded product in futures product listed in Bursa, which is the crude palm oil futures or FCPO, follows up by the soybean futures or FSOY. Next, we have our indices futures like the FKLI, F4GM, and FM70 index futures. And also we have gold futures in Malaysia. And last but not least, another important futures product that we have in Malaysia is the FCNH, which is the Chinese renminbi futures that is also tradable in Malaysia. Now, I want to use one of several futures product in Malaysia to display seasonal tendency for you guys. Okay, so on the table on your right is what we call a heat map. It's a seasonal heat map that shows the seasonal tendency of a product. In this case, let's use the crude palm oil futures or FCPO. All right, to allow me to show you what kind of seasonal trend that we can spot in the FCPO market. So for this table, I would like to divert everyone's attention to the last row. All right, I want to divert everyone's attention to the last row. Okay, the logo might have blocked the words. So the last row essentially represents the positive percentage, or in other words, it shows the percentage of years where a particular month ended up positive. Okay, so what it means that is that it shows us that what among the 12 months from January to December, what are those months that with a stronger bullish tendency, or what are some of the months with the strongest bearish tendency? Okay, so from this seasonal heat map over here, we can spot that for FCPO, okay, the quarter four, Q4, October, November, and December tend to be some of the most seasonally bullish month for FCPO because they are more than 50% of the time they ended up positive compared to the start of the month. Okay, so this is one of the way that we can spot seasonal pattern when it comes to the local futures market. All right, now I want to also show all of you how another example through FKLI, another very well received futures product in Malaysia. So and again, I want to divert everyone's attention to the last row. So I would question from the last row, a question to everyone, what do you think, or which month do you think is the most bullish month of the year based on historical seasonal data? Which month do you think is the historically most bullish month of the year? You can type down the month or your thoughts at the comment section below. Yes, I saw some answers. The answer is correct, right? December is one of the most bullish month for FKLI futures because from 2015 to 2023, okay, it had for all these years, it has ended up positive 100% of the time. So in other words, it opened at a lower price than the closing price at each month end. So this shows that December is one of the most bullish month for FKLI futures. Now, we have spotted, good job to everyone where we have spotted the most bullish month of the year. What do you think is the most bearish month of the year from this table? You can type your answer at the comment section below. Right, I saw some answers. The answer is correct, right? The answer is September. So September is a month for FKLI futures where from 2015 to 2023, it has ended up negative, right? 100% of the time, 100% of the time. Or in other words, it has never gone higher than its opening price during the start of the month, right? So when you have this kind of information, you can make a smarter trade or investment decision based on historical seasonal data. All right. Now, at this point, some of you might ask, hey, Yixuan, how do I get this? How do I get access to all this seasonal heat map? Now, let me quickly show you how to access this seasonal heat map for free. Now, I will encourage, if you are interested, you can take a photo or screenshot of the steps that I'm going to share with you, or you can write it down in your own notes. All right, so let's get started. Step number one, I believe TradingView is a charting platform that most traders and investors are familiar with. So just go to TradingView and step one, go under indicators. Go under indicators, and step number two, at the search bar, okay, at the search bar, search for seasonality. Okay, search for seasonality. Okay, and once you do that, number three, click on the under technical, select seasonality. All right, this is the official seasonal heat map from TradingView. Okay, so once you have done that, you'll be able to see a seasonal heat map display right below your chart. Okay, so this is how you get access to seasonal heat map for free. Okay, but there's much more to this, but let's wrap up our section, this particular section about seasonal trend. So seasonal trend or seasonality represents a repetitive and relatively predictable pattern in the market and our daily life. You know, things like weather, you know, things like our rainy season in Malaysia and so on. Okay. And some futures instrument, they display a distinct seasonal pattern. Remember, like how FKLI is generally bullish, one of the most bullish month in December and one of the most bearish month in September, right? Some futures instrument displays this kind of distinct seasonal pattern that could be used by traders to make more informed trade decisions. And number three, a seasonal heat map such as the one that I show everyone could be used to analyze if an instrument display a seasonal trend or not. Okay, now that I've given everyone a brief overview of what is seasonal trend or seasonality, I want to take a step back and share with everyone what is about spread trading. I will do an introduction about spread trading to everyone. Okay, spread trading. What is spread trading? Now, to do that, I want to also right now take a step back to introduce to everyone the futures market. What makes futures market unique compared to the likes of maybe the stock market? Okay, futures market is unique because it had you as a trader has the ability to trade futures contract with different expiration month. So as an example, okay, you can trade, right now it's October, you can trade the FCPO or crude palm oil futures contract, October contract. Not only that, at the same time, you can at the same time trade the November and December FCPO contract. How amazing is that? So there's a term that I want to introduce to everyone over here. Okay, so for contract month that's nearer to us, like as an example from this visual over here, right now it's October. So generally we'll call the contract month that's nearest to us near month contract. Okay, near month contract are contract that is nearest to us. Okay, and for contract that's further from us, like in this case the November and December FCPO contract, we call them far month contract. Okay, remember, because I will be using the term near month and far month contract quite a lot in the next few slides. Okay, near month contract that is nearer to us. Okay, far month contract that is further from us. Okay. Now, the uniqueness of different contract month in futures market allow us to trade this thing called spread. Okay. So what is spread essentially? Spread, simply put, is just a price difference between two futures contracts. So let me show you an example. If I am trading an October and November FCPO spread, what I'm doing essentially is I'm buying one October 2024 contract and I'm selling one November 2024 contract at the same time. Okay, let me repeat. If I'm trading a October-November spread, I'm essentially buying one October 2024 contract and I'm selling one November 2024 contract. Okay, so let me show you an example. So let's say October 2024 contract is 4,000 ringgit and November 2024 contract is 3,960 ringgit. So the spread essentially is 4,000 minus 3,960 and I will get 40 points. Right, easy to understand, right? Okay, now let me test everyone. If the October 2024 contract is 4,100 ringgit instead, my question to everyone, what is the spread for FCPO October and November? What is the spread? How many points? Yes, thank you so much. The answer is 140 points. Now, meanwhile, on the other hand, if the October 2024 contract is 3,950 ringgit and November 2024 contract is 4,050 ringgit, what is the spread for October and November spread? What in this case? The answer is minus 100 points. So this is essentially spread when it comes to the futures market. It's nothing very complicated. So it's as simple as that. Okay, don't think about it too complicated. Okay, now to show you in a chart point of view or in a chart perspective, I want to show you this chart. On the blue line, the blue chart represent the FCPO October contract. The red line represent the FCPO November contract. Okay, and the difference between them, ladies and gentlemen, the difference between them is essentially the spread. So the blue line minus the red line is equivalent to the spread of between two contracts. Okay. Now that I've shared about spread with everyone, I want to tie it back to the more practical usage of how can we use spread in trading. Okay, so essentially, at the simplest form, spread trading refers to traders speculating, okay, on the price difference between two futures contracts of different months. Okay, let me repeat. At the simplest form, spread trading refers to a trader speculating on the price difference, okay, price difference between two futures contracts of different months. So this is also known as calendar spread, okay? This is also known as calendar spread. So when we are being bullish on the calendar spread, or we are essentially expecting the widening of a calendar spread. Let me show you an example. So let's say today, okay, October 2024 contract is 4,000 ringgit. November 2024 contract is 3,950 ringgit. That gives us a spread of 50 points. Now, so let's say next week, all right, 1 week from now, October 2024 contract becomes 4,100 ringgit. November 2024 contract becomes 3,960 ringgit. Okay, now we have this gives us a spread of 140 points. My question to everyone, as the spread widen with time or narrowed with time? Okay, my question to everyone, from 50 points to 140 points, have the spread widened with time or narrowed with time? You can type the answer widened or narrowed, W or N, at the comment section. Yes, widened. Thank you so much. So in short, right, when we are being bullish as a spread trader, we're expecting the spread between two contracts to widen with time. Now, on the other hand, when we are being bearish, okay, we are essentially expecting the spread to narrow with time, okay? So let's say today, just like just now, okay, we have FCPO spread of 50 points for October and November. Next week, we have a October 2024 contract become 4,100 ringgit, and November 2024 contract becomes 4,080 ringgit. That gives us a spread of 20 points. Question: has the spread widened or narrowed? If it's widened, type W. If you think it's narrowed, type N. Yes, correct. The answer is the spread has narrowed at for this example. Okay. Now, I also want to take this opportunity to differentiate the definition of bullish and bearish between the kind of trading that most of us are familiar of compared to spread trading. Okay, because I understand that some of you might be very new to spread trading. Okay, so when we the kind of trading that we are familiar of, right, we call it generally outright trading. Okay, this is something that a concept that most traders and investors are familiar with. Okay, when we are talking about outright trading, and when a trader is bearish, when a trader is bullish, okay, when a trader is bullish, we are essentially expecting price to increase with time. Okay, on the other hand, if a trader is bearish when it comes to outright trading, we are expecting price to drop with time. Okay, makes sense? All right, so this is something that we are very familiar with, right? We buy something, right? We expect, generally, we would like the price to go up. We are being bullish, okay? So this is what we call outright trading. On the other hand, the definition of bullish and bearish for spread trading is slightly different, okay? So when we are bullish for a spread, we are expecting the spread to widen with time, okay? On the other hand, when we are bearish on the spread, okay, we are expecting the spread to narrow with time, okay? So the definition is different, okay? Now, I want to divert everyone's attention to this particular table over here. So I put everything that I've shared in the previous few slides into this particular table so everyone can understand, all right? So let's focus on the column in the middle. When we are buying a calendar spread, okay, when we are buying a calendar spread, you as a trader are essentially being bullish, okay? You make money when the spread widen, okay? You make money when the spread widen with time, okay? You lose money when the spread narrows, okay? Now, on the other hand, on the red colored column, when you're selling a calendar spread, you are being bearish, okay? You make money when the spread become narrows, okay? And when you lose money, right, you just terbalik everything. When you lose money when the spread widen, okay? Make sense? Now, I also want to take this opportunity to show everyone a P&L calculation, okay? So that everyone understand this to heart, okay? So let's say today, FCPO spread for October and November is 50 points, all right? And next week, FCPO spread for October and November is 140 points. Now let's take let's take that FCPO value per point is 25 ringgit. And can I ask everyone's help? How many, in terms of profit, right? How many points have we made from this? If we are being bullish, how many points have we made in terms of in this example? The answer is yes. The answer is 90 points. It's essentially, we are taking 140 minus 50 equals to 90. Now, next question. How many points, in terms of RM, how much profit have we made? In terms of RM, how much profit have we made from this trade? The answer is, we will take 90 points times 25 ringgit per point, which is the value per point for FCPO, and we'll get 2,250 ringgit. So this is how we calculate the profit and loss for the futures market, essentially. Okay. Now that I've shared what is spread trading, the concept of spread trading with everyone, I would also like to go deeper into a more practical application of seasonal trading in spreads. Okay, so get ready, write down some notes if you need. Okay, now I will use some case study, and I will start with FCPO or crude palm oil futures. Okay, before that, let me give everyone some context. Number one, do you know that FCPO futures is one of the most traded futures contract in Malaysia? And in fact, Malaysia is the second largest CPO producer in the world. The first being Indonesia. All right. And this one is important. Palm oil is produced in states like Sabah, Sarawak, Johor, Pahang, Perak, and Seremban. As you can see in this particular map here, okay, I want to divert your attention to the states with the most red dots. All these red dots represent palm oil mill, all right, which is where palm oil is being produced and processed. Okay, so this is important because when we talk about seasonal trend later, right? Remember these states like Sabah, Sarawak, Johor, and Perak. Okay, these states will be very instrumental for us to understand seasonal trend later. Okay, and why? Because palm oil production is highly seasonal in Malaysia because of our weather condition. Remember the monsoon that I mentioned just now? Yes, all these are very important factors that determine, okay, palm oil prices. Now, let me recap, okay? November to March, okay? The month of November to March are generally, in Malaysia, we experience northeast monsoon or monsoon timur laut, where they tend to be heavy rainfall in palm oil producing states, right? Like Johor, Sabah, Sarawak, and Pahang. Now, take a look at the map on your right, all the red colored dots, okay? Go spot places like Johor, Sabah, Sarawak, and Pahang. All these places are major palm oil producing states. All right. As such, from the period of November to March, since there are seasonally more rain, production will usually drop during this time of the year, and they will usually bottom. Production of palm oil will usually bottom in the month of February or March. Okay, and after that, April onwards, since there are seasonally less rain after the monsoon season ends, production will generally pick up in the month of April or May and peak around the month of October. Now, what does that mean to FCPO spread? What does that mean for us that wants to trade the FCPO spread? Now, I want to bring everyone's attention to this particular sentence, okay? One of the many reasons why spread widen, okay, or narrow is due to uncertainty, okay? The keyword here is uncertainty. Now, generally, the uncertainty at the present, right? The higher uncertainty at the present will cause near-month contract, which is a contract closer to us, to rise more than far-month contract, okay? Let me show you an example. As an example, let's say the FCPO near-month contract is 4,100 ringgit and far-month contract is 4,050 ringgit, which gives us a spread of 50 points. Now, let's say there's an unexpected rainfall for a period of time. And what does it cause? Essentially, production drop. And what will this cause? Ultimately, there's more uncertainty at the present. Okay, so what this lead to ultimately is price to increase. But you usually notice that near month, right, when there's a high uncertainty at the present, you notice usually that near month palm oil FCPO contract will rise more than far month future FCPO contract, okay, which gives us, in this example, a spread of 250 points. So essentially, the spread has widened because of there's higher uncertainty in the present. Now, on the flip side, okay, on the flip side, let's say the rain has subsided, okay, and the weather has become better. So what will happen is the production will pick up and there will be less uncertainty at the present. So if if initially the near-month price is 4,500 ringgit and far-month price is 4,250 ringgit, which gives us a 250 point spread, okay? Once the uncertainty has been resolved, okay, you'll notice generally, right, not every time, but generally, right, price of near-month contract will drop more than far-month contract. So as with this as an example from here, we'll see that the price dropped from 4.5K to 4.3K. On the other hand, far-month contract dropped from 4.25K to 4.15K. So it gives us a spread of 150 points. So essentially, it shows us that the spread has narrowed because the uncertainty in the present has been resolved. Okay, understand? So the whole point of this slide, I want everyone to take away something, is that the reason why generally one of the many reasons why spread widen or narrow is due to uncertainty. Okay, remember the keyword uncertainty. All right. Now I will give everyone an example. Okay, for FCPO, a bearish scenario. So recall that April onwards, right, after a monsoon season, and generally there's seasonally less rain. So peak production will pick up in the month of April or May, okay, because monsoon season has ended. So there's a seasonal tendency here where production will recover, right? And because production has recovered, there's less reason to pay more for near-month FCPO contract. So in other words, FCPO spread tend to narrow in May, or simply put, FCPO spread tend to be seasonally bullish in the month of May. Okay, FCPO spread tend to be seasonally bullish in the month of May. Let me show you some example. So in the charts on your right, you are seeing the June and July calendar spread for crude palm oil from 2022, 2023, and 2024, right? The highlighted red rectangle, right, are the month of May. So if you can see over here, all 3 years, all right, for the month of May, the spread has been what? Bullish or bearish, everyone? What do you think? The spread has been bullish or bearish? The spread has been bearish for the past 3 years. So this shows us very clearly that seasonal trend is in play. Okay. Now, how about a bearish scenario? Let me show you how about a bullish scenario? Let me show you a bullish scenario. Now, recall November to March, there's seasonally more rain in Malaysia due to, especially in states with they are producing palm oil because of the monsoon season. So what will happen is generally production will drop, and that's a seasonal tendency here, which is when production drop, right? There's higher uncertainty at the present, all right? So as such, it makes more sense to pay for a larger price premium for near-month FCPO contract due to all this uncertainty. So in other words, FCPO spread tend to widen between the month of December to March. Simply put, FCPO spread tend to be seasonally bullish, okay? FCPO spread tend to be seasonally bullish from about the month of December or January to a month of February or March. So let me show you the chart over here. The chart you are seeing on your right are the calendar spread or the spread chart of May and June, all right, for FCPO. And the highlighted, okay, I want everyone focus on the highlighted green rectangle, all right, is a month of December to March, okay, 2022, 2023, and 2024 respectively. So as you can see, generally the trend tend to be bullish from the month of December to March. So this is seasonal trend. This is also seasonal trend in play for FCPO. So you can see to a certain extent, seasonal trend tend to be very reliable, decently reliable, right? For most of the time. I'll share with you some of the flaw or downside of seasonal trading, but generally it tend to be decently reliable. Now, after FCPO, let me show you another example with FKLI. Okay, FKLI futures essentially it tracks our very own KLCI index, which comprises of the top 30 largest listed companies in Malaysia by market cap. So every day you see in the news, what's the KLCI doing, right? So there is a way to trade it, which is through FKLI futures. Okay. Now pay attention, because FKLI is not a commodity like crude palm oil, FCPO. So FKLI is influenced by something different. Okay, FKLI, the seasonal trend of FKLI is partly influenced by keyword dividends. Okay, so what you can notice over here is that the price of February FKLI contract tend to be higher than the March FKLI contract. Why? Because March is usually when dividend is announced for most companies. Okay, and dividends are usually factored in for the March contracts pricing. Now, in other words, just remember this: February tend to be seasonally bullish month for the February and March FKLI calendar spread. Okay, let me show you, all right, from the chart. So in the chart over here, the blue line represents the FKLI February 2024 chart, and the orange one shows you the FKLI March 2024 chart. Okay, and the highlighted green zone or rectangle is the month of February. So if you notice, if you observe closely, there are three black arrows, right? And all this arrow, it widens with time. So what it tells us is that, generally speaking, right, with time, okay, the spread or the price difference between the February and March FKI contract, they tend to widen with time during the month of February. Okay, if this isn't clear to you, let me show you in terms of the spread chart, which is essentially derived from February and March, February minus March. Okay, so as you can see over here, the spread chart has clearly shown us that February tend to be a bullish month for the spread. Okay, so now that now I've shared with everyone some of the concept and the application behind a seasonal pattern for spread trading. I also want to share with everyone some of the things that you need to be aware of if you want to get started with trading seasonal trend, especially for spread. Okay, this also comes from personal experience. Okay, now get ready. Number one, seasonal trend, they do not always happen at the same time. That's why I recall that I say that they are decently reliable, but they are not always 100% reliable. Okay, I will expand more on this in a bit. Okay, now so as recall that for FCPO, okay, the month of December to March is generally bullish, all right, for the spread. Why? Because of the monsoon season. Okay, but it does not necessarily begin at the same time every year. What do I mean by this? Let me show you an example. Pull off some chart to show you an example. Okay, tree chart over here shows you the FCPO calendar spread. Okay, highlighted in green zone is the month of December to March. Okay, now you can see generally they all goes up, but they do not goes up in the same way. Okay, so if you observe for 2022 and 2024, right, the far left and right chart, right, they tend to go up nicely, right, which means that when you take a long in the month of May, okay, the month of May, after that, they tend to just go up, okay. But if you notice, for 2023, if you go long at the month of May, you would have to gone through some period of drawdown, which means the price will go against you before it finally goes up back to its usual seasonal trend pattern. Okay, so this is what I'm trying to say. Seasonal trend, they do not always happen at the same time. Although I say, okay, generally the month of December or March tend to be bullish for all the spread, but they do not always happen at the same time. Sometimes if you are lucky enough, it happens at the month, it happens just so at the month of May, but sometimes it might take longer. Okay, that's what I'm trying to say. Okay, now secondly, okay, seasonal trend is not guaranteed to work 100% of the time. Now remember, let's recall the Malaysia weather in May and September tends to be moderate because monsoon season in the palm oil producing state has ended. So this normally, all right, lead to higher production for all this month, leading to FCPO spread to be seasonally bearish. Okay, if you can see on for the chart on your right, 2022 and 2023, right, highlighted in red or orange, right, are the month of May to September. So they tend to be bearish because because production is recovering and there's no reason to pay more for near month contract. Okay, so they tend to be seasonally bearish. However, in 2024, something changed. Two things, in fact. Number one, La Nina, which is a weather condition, caused excessive rain in the second half of 2024. Essentially, it disrupted the production of crude palm oil. Okay. Number two, India, being the top importer of palm oil, right? They decided to raise import tax from 0% to 20%, right? Effective 14th of September this year. This caused an increase or spike in palm oil purchases from India before the whole tax implementation. Now, what does this mean to the spread? Essentially, the tax causes an increase in demand. On the other hand, the rain causes a drop in supply. Now, question to everyone, before I review the answer, what do you think? Is this a bullish or bearish situation for the FCPO spread? Is this a bullish or bearish situation? Yes, the answer is bullish. Okay, so in 2024, okay, from the month of May to September, you can see that the spread actually gone up against the historical seasonal trend of being bearish. Okay, so the point that I'm trying to convey here is seasonal trend is not guaranteed to work 100% of the time because there are always external factors that can affect the direction of the spreads. Okay, now a takeaway from this section. Okay, number one, spread for certain futures instruments, they offer consistent seasonal trend, but they do not always happen, right, at the same time every year. Number two, seasonal pattern is not, all right, 100% guaranteed. Please do not assume that this is a holy grail, right? Because it's not perfect, okay? And because it's subject to shift in market condition. Now, I've shared a lot about the how to use spread trading, how to use seasonal trend in spread trading. I also shared some of the downside or risks when it comes to trading seasonal trend for spread. Now, is there a way to improve some of the underlying flaw of seasonal trading for spread? The answer is yes. From my personal experience, I would like to share some of the ideas that that have inspired me, right, to improve my own personal trading strategy. Okay, but before that, let me just quickly recap the cons of if you decided to do seasonal trading. What are some of the cons? All right, number one is the timing, right? The timing for seasonal trend is not always accurate, right? In short, it do not always at the same time every year. Number two, probability. Seasonal trend are not 100% guaranteed and is subject to changes in market condition. Okay, so just using back the example that I shared with everyone just now. All right, so because of the weather condition and also the import tax from India, okay, 2024 was bullish, which gone against all the historical seasonal pattern that we assumed because we always thought it was bearish. Okay, so this is the these are some of the cons of pure seasonal trading. Now, how to improve? Okay, in my opinion, adding technical analysis is one way for traders to improve on their seasonal trading approach because it achieves two things. Number one, it avoids traders from trading against the trend. Number two, it helps improve the timing for trade execution. Now, again, use back the example for FCPO, right? It is seasonally bearish in May to September. However, right, because of the India import tax and La Nina, which caused excessive rain, right? If as a trader we add something like a trend indicator, like the 21-day exponential moving average, right? In this example, is represented by the orange trend line. Okay, if we can spot this from using a technical indicator, okay, we would have avoided this shorting this trade because the price has been holding above the trend indicator, right, which indicate a bullish trend. So if I'm a trader, I look at this, and despite historical seasonal trend telling me to short, but I'm looking at this, I say, oh, this is bullish. Why would I go and short it? Because it might go higher. Okay, so this shows how technical analysis or even simple technical analysis indicators can help us improve our decision making by not trading against the trend. Now, how about timing of trade execution? Now, in 2022, let's use the same month, but for 2022. Okay, it used to be seasonally bearish, but if you short it at the beginning of the month of May, you would have gone through a sideways price action. You have experienced a zigzagging experience, right? Highlighted in the green zone for a while before the market eventually drops. But if I add a trend indicator, okay, I would have been able to spot when the trend starts to form and holds below the 21-day exponential moving average. And by the way, this 21-day EMA is something that I personally use. You can use any kind of trend indicator you want, all right? So this is just an example to showcase how you can improve your decision making with technical analysis. Okay, make sense? All right, now another way that a trader could improve on is to add outlook analysis. Okay, outlook analysis achieves an important goal. It allows traders to anticipate. All right, the keyword here is to anticipate for potential risk ahead of time. So remember the La Nina that I mentioned just now, excessive rain. All right, so the excessive rain, the risk of La Nina between the month of June and August this year has actually been reported in February 2024. So what does it mean? It means that it allows us as traders to be aware of the potential increase in uncertainty while trading during the month of June to August. Make sense? It gives us a foresight that, okay, maybe I should be more careful while trading this towards the month of June to August. Now, if we combine what we have learned, right, for the past few slides, right, seasonal outlook plus technical, I would say it generally improve decision making for traders. Okay, so let's synthesize what we have learned. So seasonally, all right, FCPO has been bearish from the month of May to September, right? However, the outlook this year has been the news of a potential La Nina between June to August has been mentioned ahead of time. It means that news or forecast has told us that there is a potential excessive rain happening for the month ahead during the month of February. So we know, like few months ahead, that there is a risk already. All right. And then from a technical point of view, price has held above 21-day EMA, which is a trend indicator that I personally use, which indicates an uptrend. So combining all these insights, right, we can make a few decisions. Number one, because all three elements are not aligned, okay, like seasonal, historically, he has been bearish, but outlook and technical are bullish. So because all these elements are not aligned, I could stay away from this trade, right? Or because the outlook is bearish and the technical is also bearish, I could also consider taking a counter seasonal trade or trend following trade based on the existing or current price action and just close an eye to the past historical seasonal data, right? So these are some of the decision-making process that a trader could implement in their seasonal trading approach. Now, a takeaway from this session, okay, on its own, seasonal trading is exposed to flaws such as a lack of timing and also potential risk of shift in outlook. It means it's not 100% reliable, okay? Now, how you can improve on it is through adding technical analysis and or outlook analysis to refine your decision making. Okay. Now, at this point, some of you might be interested. Okay, Yishuan, I'm interested to get started with with spread trading. How do I? Where do I get started? Okay. Now, let me just show you some information. Okay. Now, first of all, I would say that the most important thing that you need to be aware of is you need to learn fundamental, seasonal, and technical analysis when it comes to spread trading. And what's the best place to learn all this stuff? Is through Bursa Marketplace, which is Bursa Malaysia official platform, where they have all the resources available for all this topic. Okay, so just visit this website, bursamarketplace.com, and you'll be able to find a lot of useful information on this topic. I also encourage everyone to choose a futures broker that offers spread trading. Okay, you can also find this information by when you visit Bursa Marketplace by clicking on the Open a Trading Account button. Okay, now number 3. Okay, here's an interesting part. If you are familiar with stocks, stock brokers, they usually publish their commission rates on their website. But futures brokers in Malaysia, at least, they don't really do so. So I would encourage everyone to email some of these brokers, inquire about their commission and whether they allow you to trade spread or not. Okay, email them, right? And ask them, right? What's your commission, right? Can you give me a better rate and so on? So this is something that you should do if you are interested to get started with futures trading. Now, other than that, you also want to choose a broker that offers you access to assets that you want to trade. So example, the most famous being the FCPO futures, the crude palm oil futures, yeah, and also the FKLI futures. These are two of the most well-traded futures products in Malaysia, but there are also very interesting products like the gold futures, soybean futures, and also the FCNH Chinese renminbi futures, which you can also consider checking out. Now, select a broker that offers a good support and complete execution platform. So ask them if they offer things like charting, ask them if they offer trading platform for things like price ladder and so on. So these are very important features, in my opinion, that can help you really execute properly as a spread trader. Okay, very important. Now, how to find, some of you at this point, if you don't have a futures broker account, some of you might ask, hey, Yishuan, how do I get access to all this spread chart? Okay, let me just show you. Okay, before that, let me just quickly explain for those of you who are not familiar with the futures market. Futures market from month January to December is represented by different alphabet. So as you can see in the table on your left, January is represented by F, February is represented by G, March is represented by H, and so on. Okay, so these are some of the things that you need to familiarize yourself with as a futures trader. Okay, so the first way to get access to spread chart is through TradingView. Okay, we mentioned TradingView just now. So go to TradingView. What you can do is under the when you are under the symbol search, just type if you are interested to find the spread chart for FCPO. Okay, so just type FCPO. So let's say I want to find the spread chart for the month of August and September. Okay, August and September. Question, quiz to everyone. What is the alphabet that represents August and September? What is the alphabet that represents the month of August and September? The answer is Q and U. Yes, correct. So if I want to find the spread chart for FCPO August and September, what I will do is I'll type FCPO Q 2024 minus FCPO U 2024, right? And once I hit enter, I'll be able to get access to the spread chart, okay, for FCPO August and September 2024. Now, usually this chart might look a little overwhelming for you. So usually for me, what I will do is I'll change some of the setting, all right? I'll go under the chart setting, and instead of the usual candlestick chart that we are familiar with, I'll change to area chart, which you can see I marked number 2, right? I'll change to area chart. Then this gives us a clearer picture of the price action for the spread chart. Okay, so this is way number 1 for people to get access to spread chart. All right, and I personally use it every now and then. Okay, now if you have a trading platform, in Malaysia, some brokers, they offer this platform called quick screen trading or QST. What you can usually do is you can type just like just now with TradingView, you can type the instrument that you want. So in QST, instead of FCPO, you type MPC, which is also equivalent to crude palm oil futures. So you type MPC Q24, U24, and the same thing, once you hit enter, you'll be able to see the spread chart. Okay, so this is two of the ways for you, trader, to get access to a spread chart. All right. Now, another question that some people might ask, hey, Yushen, how much do I need to get started with spread trading? So for this, I'll show you how a few steps on how to identify how much you need. Okay. So step number one, you want to identify the margin requirement for the calendar spread that you want to trade. So as an example over here, sorry, let me explain. Okay, what is margin? Margin is the amount that you need in your account to initiate and hold your trade. So as an example, in this particular screenshot over here, the margin requirement is 1,500 ringgit. So this means that you will need 1,500 ringgit to initiate this spread trading, put a position in this spread. Okay. Now, step two, because price might go against you, you will need additional buffer, right, for this case. So let's say your stop loss is, you have set your stop loss at 300 ringgit. Then the bare minimum you should have on top of this 1,500 ringgit as a buffer is slightly more than 300 ringgit. So in short, how much you need is essentially 1,500 ringgit as a margin to initiate a position in this trade, and let's say about 500 ringgit as a buffer, just in case price goes against you. So in short, will need about 2,000 ringgit for this particular trade to be executed. Okay, so this is how you identify how much you need to execute a spread trade. Okay. Now, section takeaway, how to get started with spread trading. Number one, understand things like seasonal pattern, fundamental of the spread for the instrument that you like to trade. Because example, we have talked about FCPO today, we have talked about FKLI today. So these are some of the most traded futures product in Malaysia, with some very clear seasonal pattern, right? And also learn things like outlook and technical analysis for more precise trade execution. Now, secondly, opt for futures broker with competitive commission, okay? And opt for futures brokers that allows you to trade spread, because not all futures broker allows you to trade spread. So ask them for all these details, okay? And then number four, opt for brokers that provide you with a complete trading platform like charting and price ladder, right? You'll be surprised. Certain brokers might not provide some things like that, okay? So that we have almost come to the end of the sharing session. So let me conclude what we have learned today with some of the takeaways. Okay, number one, a unique feature of futures trading is you have the ability to trade futures contract with different expiration month. Like, remember, we can trade October, we can trade November, we can trade December futures contract. Okay, and at its simplest form, spread trading refers to traders speculating, right, on the price difference between two futures contracts of different months. And seasonal trading allows traders to trade consistent seasonal tendency in the future in future spread. Okay, it's not 100% accurate, but generally it tends to be a reliable information to make your decision as a piece of decision making process. Okay, and as I mentioned, okay, there are downside to seasonal trading, right? Timing is not always perfect, okay, and it's not 100% guaranteed, right? It could be affected by things like weather or policies for our own country or even the other countries, okay? So this is pretty much it. Oh yeah, lastly, okay, how to refine seasonal trade, okay? Use things like outlook analysis, combine it with technical analysis. This is something that I personally look into as well. Okay, so essentially these are 5 key takeaways from the sharing session today. I hope you have learned something from this session, and it's a pleasure Okay, I would like, thank you so much, and I would like to pass the floor back to CY.